Hey guys, welcome back. So in this video, I'm going to be doing my 2019 stock analysis for Facebook, and I'm going to be going over kind of what my investment philosophy is with Facebook, where I see Facebook as a company, and what I expect out of Facebook over the next couple of years, and overall why I am still bullish on Facebook stock. You know, this is a stock that I've been covering here on this channel for a couple of months now, and with all of the negative news and everything that's been going on with the stock and the continued downward spiral that it's been in, I'm still bullish on the company over the next couple of years, and I wanted to kind of go over it in this video. So if you're interested in any of that, make sure to hit that like button, hit the subscribe button, hit the bell notification if you're interested in getting any more updates on any of the news here on my channel. And without further ado, let's get into the video. So giving a quick overview of Facebook and what the company is. Facebook is essentially a company that is an umbrella for multiple apps and other ventures that are just kind of under the Facebook's umbrella. The company sits at about 150 different companies that are kind of within its acquisition realm. But the main companies that kind of make up Facebook are Facebook itself, Facebook Messenger, Instagram, WhatsApp, and Oculus. Now, the majority of its revenue comes off of its social media platforms, with 91% of its revenue coming just from advertisements. So taking a quick overview of Facebook and what's going on with the company, you can kind of think about Facebook as being one of the biggest social media giants in the world. The company actually owns the apps called Facebook, Facebook Messenger, Instagram, WhatsApp, and the VR company Oculus, which makes the Oculus Rift, and a couple of other VR products. The company in its entirety is essentially just an advertisement company, with 91% of its yearly revenue coming just from advertisements on its social media platforms. And all of these social media platforms, when you just cram them all together, generate roughly 2 billion monthly active users each month. So that means that you have roughly 2 billion people that are exposed to a Facebook product each and every month. So you can see why they're able to generate so much money off of advertisements, because this is kind of the creme de la creme for companies that are looking for advertisement, whether they're startups or well-known companies that are looking to, kind of push their products out to end users. Facebook is one of the #1 ways that companies can, spend their advertising budget and get a large ROI on that, to roughly about 2 billion users a month. The company is also doing roughly a $24 billion share buyback program that I'll get into a little bit later. But that's just essentially you can look at Facebook at face value with what's going on with the company and what the company is. So any analysis of Facebook wouldn't at all be complete without a quick overview of all the negative headwinds that have been affecting the company over the past couple of years. Now, Facebook has been experiencing a lot of negative pressure, especially during this past year, largely due to the fact of many different cybersecurity related issues, political scandals, and other data scandals that are kind of involved with not only Facebook, but also all of the tech and data giants throughout the world, because of a lot of user privacy issues and a lot of, changing terms of agreements so that way users actually know exactly what they're getting in for and what their data is being used for. But essentially, running down the list of the biggest ones that I think kind of face Facebook to this day and that will face Facebook for the foreseeable future, you have the Cambridge Analytica scandal that I did a quick video about it here. You have all the fake accounts that have known to been interfering with elections. A lot of people have a lot of scrutiny and a lot of speculation saying that due to these fake accounts, it was one of the major reasons why Trump was able to be elected president. Whether you agree with that or not, that is something that is kind of circulating around the company. Many lawsuits are coming in from different entities, ranging from Washington, D.C. all the way to individual companies that are kind of like saying that end users' data is getting kind of let out into the public without their knowing. And all of this is kind of getting wrapped under the fact that Facebook does not have security with its data, and Facebook is also able to misuse their data without their end users really understanding exactly what's going on, because of how ignorant the overall population is to data and data security. And a lot of companies are just kind of looking at Facebook, and governments alike are kind of looking at Facebook and saying that, okay, you have all this power at your fingertips. How are we going to know that you're not going to misuse that or continue to misuse that in the future? And a lot of people are giving Facebook a very negative outlook because of that. You can also look at the looming regulations, largely due to the fact that data being collected by all these massive tech giants are a pretty viable weapon to either the end user or even nations or individual companies alike. So a lot of people are calling in for regulations in order to say, like, restricting what you can use with that data. And between the looming regulations and also the current hacking attempts, and also a couple of successes that I'll get into in a little bit, that Facebook has been experiencing, Facebook right now is not in the best of light, at least in the public's eyes, for the short term, because of all these data issues that have been arising over the past couple of years. And I will kind of caveat this with the fact that Facebook has been known for having data issues, and all the major tech giants have been known for having data issues. pretty much since their inception. Whenever you deal with data at this scale, it becomes increasingly difficult to kind of keep a tight wrap on all of that data, make sure it's not being neglected or misused. So in my opinion, all of this is kind of to be expected with any company that is in the bracket that Facebook or Google are kind of in. And also, as these companies get more and more users each day, it becomes more and more difficult for these companies to keep a wrap on that data. But it is something that is definitely a negative about the company, and it's something that everybody seems to be focusing on, especially over the past couple of months. It should also be noticed that EPS and margins are slowing and shortening in Facebook, and that's largely due to Facebook's attempts to correct these listed issues. And this is going to come with a lot of growing pains. So while this is kind of ensuring Facebook for the foreseeable future, the fact that it will have its security up to date and it'll be able to, kind of vet out fake accounts and other misuse of data, it is really difficult for Facebook to grow at the same rate it's been growing at over the past couple of years, assuming it's going to be piling on all of these expenses in order to kind of keep all these issues under wraps. So that is something definitely to keep in mind with Facebook, and something you definitely need to take in consideration when you do your investment philosophy on Facebook. And essentially, those are the main reasons why Facebook has been kind of in such a negative light over the past couple of months. But now let me go into the positive things that you can think about with Facebook and whether or not that is valid for dealing with all these negative attributes. So taking a look at the positive things that Facebook has going for it, the company is a cash-generating machine. And over the past 12 months, the company's generated over $17 billion in free cash flow. The company has been able to use some of that free cash flow and is now speculating the idea of buying and fully out acquiring different cybersecurity firms in order to make them all in-house operations, so that way Facebook will have the best of the best cybersecurity for its entity and then all of its future products that it plans on coming out in the future. And in my opinion, this will kind of help them shield from any further data issues or cybersecurity scandals that are going to be arising. There will probably be more in the future, and that's something you definitely need to think about. But I think that owning these companies straight out and being able to just add them into the ecosystem that Facebook is creating, I think that that is a good thing for the long term. It will slow down margins, as I said earlier, and it will kind of make the company less profitable because of all this acquisition. But I think it's the smartest option that Facebook has, given all of the issues that are involving data and cybersecurity right now. The company still owns 4 of the largest social media platforms in the world, between Facebook, Messenger, Instagram, and WhatsApp. And I don't really see that happening anytime soon, largely due to the fact that when people get immersed in a social media platform, that is essentially how they communicate with a large amount of their friends. That's essentially what they go to in their spare time, is social media. And it has been in the news constantly about how teenagers and young adults and anybody that has kind of, ridden the tech bandwagon over the past couple of years, since we kind of got out of the dot-com bubble and as we went into the internet age, everybody seems to be addicted to social media in one way or another. And with Facebook owning some of the most popular social media accounts in the world, I definitely don't think that there's going to be a large amount of user-based fluctuations in the foreseeable future to the downside. But with more and more of the world getting more and more exposed to smartphones and having more internet accessibility, I definitely think that these accounts have the ability to grow over the next couple of years. And I think that Facebook kind of secured its moat as being the social media giant, and I believe that that will continue for the foreseeable future. Now, one of the interesting things about Facebook is that Facebook is in a very good position, in my opinion, with 91% of its revenue coming from advertisements. Facebook is actually in a very unique situation that it has a lot of pricing power over those advertisements. In my opinion, when you look at the cost of ads for companies or individuals to run on Facebook or any of their other social media platforms, it is reasonably cheap. Right now you can spend about $10 and hit roughly 1,000 people given your individual criteria, and that way you can have targeted ads for those individuals that give you a much higher likelihood that people go out and buy that product. And I think Facebook over the next 10 years will be able to just keep increasing that increment as often as they want, because as of right now, it has the highest ROI compared to any other advertisement medium. And I think that Facebook will slowly kind of increase their numbers as the years go on, especially as larger companies start to really focus on using Facebook and Instagram and WhatsApp to be kind of their main advertisement revenue in order to get to young individuals. And in my opinion, when you compare a Facebook ad to a radio ad or a billboard, Facebook is going to give you the best ROI hands down. And I think that more and more companies will kind of continue to adapt to Facebook's ecosystem when they do their advertising. And I think Facebook has a large runway in order to kind of increase those prices as much as they want, and it will still be the best alternative for all these companies. It should also be noted that Facebook has one of the best balance sheets out there. The majority of the S&P 500 is extremely leveraged with very high amounts of debt, and not really sustainable cash flows. But Facebook has not really over leveraged itself. Facebook has kind of taken the conservative route. It is not using debt to expand, it is using free cash flow to expand, which means that anytime that we experience an economic downturn or slowdown of growth, Facebook realistically does not have to close its doors, and they can kind of continue to operate. And the only thing the company really has to worry about at the end of the day with zero debt is the fact that their share price may or may not fluctuate very drastically. But when you think about the fact that the share price has absolutely nothing to do with the underlying business, and the underlying business will be fine regardless if the share price is at $100 or if the share price is at $1,000, in my opinion, that's something I really like to see, and it's something I really focus on when I look for an investment, is because I don't want either increasing interest rates or kind of hard times that are looming on the future that no one can ever predict. I don't want to have to take that into my investment decision. So the fact that the company is able to generate $17 billion in cash flow and has virtually zero debt on their balance sheet is something I definitely look forward to. To caveat that, the EPS growth of the past 5 years, over the past 10 years, has been absolutely amazing, and even projected over the next 5 years is still one of the fastest growing companies in the S&P, even with lower guidance, because of all the money that they're having to dump into expenses and kind of revamping their cybersecurity and data collection systems. So Facebook is a company that I see, at least in terms of revenue, and at least in terms as the longevity of the company, is kind of squared away to just kind of continue generating more and more money and growing into the foreseeable future. Now, take a look at Facebook's financial stability. I took their 3 financial statements and kind of jotted down the 3 biggest points that I think from each statement that is something that you really need to pay attention to if you're an investor in the company. So Facebook currently stands with roughly $41 billion worth of cash. They have virtually zero debt, and their total liabilities just come in at just about $12 billion. So that means that with just the cash that Facebook has on hand, they can have zero liabilities, which means that the company has absolutely no obligations for the foreseeable future. And that's something that, in my opinion, shows one of the strongest balance sheets a company and the positions that a company can be in for the foreseeable future, because that means that no matter what happens with the company, what happens with the economics of macro or micro alike, the company does not really have to worry about any payments over the foreseeable future. Looking at their statement of free cash flows over the past 12 months, their net income came in at roughly $19.5 billion, and that equated to $17.5 billion of free cash flow. And if you look at that cash flow over the past 5 years, it has been compounding at a rough 43% annual compounded rate. So you can essentially take that number and you can apply it to almost any other company out there. And Facebook is growing their free cash flow at an alarming rate, which is something that I really like to see, because that means that the company will have more and more money to kind of expand using their own cash. They don't have to worry about any liquidity issues, and they don't have to worry about, again, any hard economic times. And then taking a quick look at their income statement, their revenue for the trailing 12 months comes in at just under $52 billion. Their EPS sits at about 7.4, and their EBITDA was just under $30 billion. So in any financial statement, in any way that you want to look at the company financially, the company is doing very well. The company is generating a lot of money without having to leverage itself. So that is something that just kind of shows a lot of financial stability for the company. It means that the company has staying power regardless of what happens in the short term. Now, I'm going to be going through a couple of valuation models that I personally use when I look at a company. Obviously, these are not the only things I go off to when I invest in a company, but there are things that are kind of stand the test of time to kind of validate whether a company is, extremely undervalued, extremely overvalued, and you can kind of gauge your investment philosophy around that. So when you use a discounted cash flow model, and I assumed that their EPS is going to grow at about 20% over the next 5 years, and then after that it'll become zero. Now obviously Facebook's EPS is probably going to grow more than 0% over the next 5 years, but due to the fact that you can feasibly have a company be valued infinity, if you assume it's going to continue to grow over 10% for the next 100 years or whatever, I play the conservative route and I give it a 0% mark after the next 5 years. And then I'm going to say that the average market return is going to be about 11% during that time frame. And if you look at the average analyst's expectations of the S&P over the next couple of years, earnings growth are not going to be at about 11%. But I decided that giving a more premium result than what people are currently anticipating will protect me from more downside that comes from other things that are going on with the company. So from that discounted cash flow, you get a fair value of roughly $147, of the company being at roughly $149. There's a slight premium to the company, but being so marginal and being only a couple dollars of the share price, I would say that the company is roughly fair valued based off of a discounted cash flow model. Now, the other model I like to do, just kind of assess, okay, how much of the future growth is already priced into the company, is the PEG ratio. So the PEG ratio is you take the PE of the company and you divide it by the estimated EPS growth rate over the next 5 years of the company. And so you have a PE of roughly 20 for the company, and you expect its growth rate is going to be at roughly 20% over the next 5 years. You get a PEG of essentially 1. So that means that the company is fairly valued. So that means that there is not too much of its future growth already priced into the company, and it has the ability to kind of, surprise you to the upside and slightly surprise you to the downside. But in my opinion, I'm more optimistic that they will beat these growth numbers. So I personally think that this is a good sign for Facebook. Now, wrapping all that up, with my key takeaways for Facebook is that Facebook is essentially a company with amazing moat, pricing power, and also has one of the strongest balance sheets out there. So at current estimates, and you can look at the financial models that I just did, or you can look at the majority of, analysts that are talking about the company right now is borderline fairly valued to undervalued. And a lot of that has to do with the fact that the share price dropped roughly 35% from its all-time high due to all the negative headwinds that have been happening with the company and also the data space in general. But essentially, when you look at the company, it is still roughly comparing to an overvalued market. I believe the standard PE on the S&P 500 right now is between a 20 and a 25. So with a company like Facebook that is growing at about a 20% clip and has a PE of roughly 20, I definitely don't think it's overvalued by any means compared to a seemingly overvalued market. The company has an amazing balance sheet, large room for EPS growth. It has room for expanding into new markets. It has a $24 billion share buyback program, which I should kind of point out that was not included in any of the estimates I gave with the PEG valuation or with the discounted cash flow. So that will also may affect your overall opinion on what the stock price is valued at. And then any possible regulations that kind of come into the company, I personally see this as a long-term positive while it's a short-term negative, because essentially if you overregulate the space, the only kind of companies that will be able to stay in this space are companies that already have a massive foothold, they already have a strong moat, and they're already generating a lot of cash flow to deal with all those regulations. So essentially, in my opinion, if regulations come in, you pretty much ensure that Facebook will be somewhat of a monopoly in the social media space. So if you have all of that and you take away the fact that the company is roughly fairly valued right now, would I buy a company at a fair value with how great it is and how strong the moat is in today's current market? And yes, that is my overall takeaway. I would buy Facebook right now. I do currently own Facebook shares, but say if I had no position in Facebook currently, right now I would probably start a new position in Facebook, assuming I had no entry in the stock at all. But again, I am already long Facebook, so that is something that you really need to take in consideration when you look at my analysis and other people's analysis, is because we are automatically going to have a positive or negative bias, whether we are for a company or short a company. So that's something you definitely need to take into consideration. But in my opinion, I will take a quote again from Warren Buffett, and that's better to buy a great company at a fair price than a fair company at a great price. And I definitely think that Facebook is a great company at a fair price currently, and that's kind of my overall opinion of Facebook. So let me know what you guys think in the comment section down below. Are you guys invested in Facebook, or do you guys not invest in Facebook? And, if you want to start any conversation about whether you think that things are going to be going good for Facebook or hard for Facebook over the next couple of years, I'd love to talk to you about it down in the comment section down below. And thank you guys again. Hope you guys got some use out of this, and I will catch you guys in the next video. Peace.